Nerina, after a poor week or so, we had shares turning around yesterday and continuing to trade positively today. Is this a shift in sentiment, do you think, or just a relief rally perhaps?
I think it's partly a relief rally, but I think certainly the bulls have got the upper hand today, thanks mostly to Barack Obama's speech on the State of the Nation last night, as well as the Fed comments last night that confirmed that interest rates will remain at an all-time low for the foreseeable future. This provided the boost that the markets have been looking for after a couple of negative sessions. It really just meant that the cheap money will still remain around, and therefore equity markets are comfortable to continue higher.
It did sound like from the US Fed it wasn't a clear-cut decision. There was at least one dissenter in the ranks there who thought they should have changed the message and not say that we will be keeping rates low for such a long period.
Yes, I think certainly they realise that it's extremely important to boost consumer spending and in that way stimulate growth in the US economy. And really the only way that they can do it at the moment is through the two-pronged approach of the very low interest rates, as well as the extension of the tax cuts, which they are keeping. They've extended that until June. And both of those factors will contrive to boost the consumer spending and essentially stimulate growth. Whether that growth is real growth or whether it's really just artificial growth doesn't really seem to faze the market much at the moment. The Asian market certainly took a very strong liking to this, and we see exporters to the US performing very well this morning. The likes of Honda and Sony certainly getting very good boost from the talks from both the Fed and Obama last night.
Well, what came out of Obama's speech that we should be looking at? Of course, there was a big focus on job creation in the United States, and we know that their job situation is pretty dire at the moment with unemployment at over 10%. Also a big focus on growing exports out of the United States. What caught your attention in that speech?
I think the tone for me of Obama's speech was one of significant frustration. I think he was hoping to have achieved so much more by 25% or a quarter of the way through his term as president of the US. There's the frustration partly of not being able to do as much as he wanted to, and then also being hampered to a large extent by the shift in the bipartisan relationships between the Republicans and the Democrats. That tone came through very strongly for me last night in his speech. He certainly followed on his talk in terms of taking a stronger and stricter view on the banks, but he didn't follow it up with any specific measures. And the market took that to be also a good sign. In other words, he's talking the strict talk, but he doesn't really follow it up with any specific measures, and therefore not quite sure how he's going to be implementing this. On the job creation front, also there were not a lot of specifics coming through. I don't think the State of the Nation address is really one in which they lay out their plans in any great detail, but rather more a sentimental, setting the tone and trying to sort of stimulate the sentiment of people again and trying to set the tone for the year that is to come.
Well, perhaps just looking at the local market today, and probably one of the best performers is Sappi. It came out with its first quarter results this morning. A loss per share of 10 US cents, and that was due to some of the costs of closing some of its operations last year. The share up 5.4% just a short while ago. So the market really liking these results despite the loss.
Yes, definitely coming off a very low base, both in terms of price as well as in terms of its earnings. This is definitely one to look through the headline numbers and look at more detail, not only in some of the detail in the numbers, but also to look at the commentary. And I think some of the positive aspects that come through is that there's certainly been an improvement in the pulp prices. There's certainly been a turnaround in demand, especially on the coated wood-free paper. And I think it also follows on the back of the news that we had out of Mondi yesterday that they are in talks with Smurfit Kappa to exchange sort of one of the operations in Europe. So Mondi had quite a good run yesterday. Sappi lagged, and today it really is playing more than catch up, following on its very, very good results. I think the market is very pleased with the set of results. It was expecting this loss, but the loss was slightly better than what is expected. It is a seasonal low in many instances, so even though at first glance it is a loss, this result is quite a bit better maybe than many market commentators expected.
Well, perhaps just looking forward, we have the gold companies coming out with their quarterly results as we head into February. And of course, it's been a tough balancing act, I suppose, for gold companies. They've had record dollar gold prices, not record rand gold prices. And of course, they do have rising costs. What are you expecting from our gold companies?
Very much so. Our gold sector does operate on this very sharp double-edged sword. You're quite right in the sense that the record dollar gold prices unfortunately did not translate into the same sort of record-breaking rand gold price territory for our companies, and then they did have to contend with rising costs, both from a labour as well as from an electricity and other cost point of view. We certainly see this theme to continue playing out throughout the year, and we think other than very specific and quite significant corporate action, there's not really much to choose in this sector from the South African point of view. There's certainly a lot more opportunity maybe in some of the other gold counters elsewhere in the world. At this stage we still favour gold fields, but certainly we're expecting them to come out with reasonable results courtesy of the strong gold price, but the eye will certainly be on the cost line when their results are released over the next 2 weeks.
We had PPI data just a short while ago, and producer price index growing by 0.7% in December. And that was from a contraction of 1.2% in November. And of course, this follows on from yesterday's CPI reading as well, slightly better than expected at 6.3% in November. Your outlook for inflation and what we're seeing here?
I think the inflation figures are quite interesting in the sense that CPI numbers slightly better than the market expected yesterday, even though it did breach the upper limit. This was mainly due to a very low base created a year ago in December 2008. On the PPI front, the first time that we are in expansion territory in 7 months. I think for us it's important to look at the detail, and a concern for us is that in an economy that is a demand-driven economy, the contribution to our inflation is very much skewed towards the administered price increases. In our CPI numbers yesterday, this was focused very much on healthcare, education and the likes, and if you exclude transport costs, which coming off a very high base a year ago actually resulted in a deflationary component to CPI yesterday, we had many of these administered price increases running in double-digit figures. One of the lowest contributors, or certainly from a contributory point of view, was in food inflation, and this confirmed the trend that we saw with the trading updates from many of our food retail companies last week, that food inflation has come off quite sharply from the highs that we saw a year ago. But we are concerned about this bipolar almost state of the inflation in our market, that despite the talk by government, we still have the very high administered price increases coming through, and the consumer who really is being hammered by the high interest rates really cannot do much more to contribute. Yesterday's or this week's decision to keep interest rates unchanged in South Africa was largely as expected, but I think we'll have to look further afield, maybe to money supply and private credit extension figures out tomorrow, both expected to be still relatively poor. We're not expecting any changes on the interest rate front anytime soon, but they might give us a further indication. Jill Marcus certainly alluded to the fact that an interest rate decline is not completely out of the question during 2010, although we don't see that to happen anytime soon. Maybe just as a final comment, if we see the strength in our rand today, just to confirm again that in a high yielding environment with no changes in interest rates in either South Africa or on the US in the international front, it confirms the yield attractiveness of the South African equity market.